Welcome to a slightly different episode of Speaking of Steel. We hope you enjoyed our recent episode from UK Metals Expo, where MEPS Head of Price Analysis and Forecast Kaye Ayub hosted a panel on the carbon steel market. Here's the follow-up to that original panel, focused on the stainless steel market. We hope you enjoy listening.
Welcome everybody. I'm Kaye Ayub, Head of Price Analysis and Forecasts at MEPS International. Today's Speaking of Steel Live discussion will explore the key drivers in the stainless steel market. Firstly, I'll introduce you to our panel members that have been gathered here today. So on the far end, we've got Alison Taylor from Marcegaglia Stainless UK. They're based in Sheffield and they're the only major stainless steel producer left here in the UK. They've got their own melting shop in the home of stainless steel in Sheffield. They're producing wire rod, bar, rebar, and they've also got a bar finishing unit as well. They have a stand at D86 at the exhibition here today. Next to Alison, we've got Lauro Catelo from Trasteel International. They're headquartered in Switzerland, and they're a growing stainless steel trading and distribution company, sort of selling it inside Europe and also outside of Europe as well. Next to Lauro, we've got Rodney Rice from Langley Alloys. Langley concentrate on specialty bars, plates, pipes and fittings. They operate globally from their sites in the UK and the US. They stock a range of higher specification stainless and nickel-based alloys, and they have a stand at J14. You can't miss them with the big mallet. And then we've also got Terry Sargeant from SteelBuy. SteelBuy are an online marketplace for the metals industry, concentrating, connecting buyers and sellers, opening up the technology side of things to the steel world. And they have a stand at E25 in the exhibition. So one of the first things we're going to discuss is one of the key demand drivers. So we know that stainless steel market has been a difficult year with strikes. At Sevenox, we've had the strikes also in Finland affecting Outokumpu. We've had low demand, volatile nickel prices, and we've also had shipping issues, just to name a few. I don't know if one of you want to start and just giving a bit of an overview on how you're seeing demand in your sector. Maybe we start with Alison on the long sector on the end there.
Okay, I guess ladies first. I guess from our side of things, I guess we would call the market, probably the kindest way to say it, it's relatively calm. I think it's been quite a challenging year. I guess it started back in 2023 and has kind of carried through to 2024. Again, with some of the outages, we found that our melt shop has been quite well loaded, I guess, for the front end of the year. We're starting to see that soften a little bit going into half two, and certainly although we saw activity levels pick up kind of quarter two, I think again it seems to have slowed down a little bit more after the summer holidays, and I think the general consensus seems that it will probably remain this way to the year end.
Rodney, how do you see the long product side more on the speciality?
I think for us we distinguish between sort of stainless and the nickel alloys. So stainless is a bit more stable, I guess. We'll have seen lead times go out and come back, but managing that flow of material has been okay. On the nickel alloys, it's a different kettle of fish. The demand spike in a way, or pick is so strong, it's emptied out the supply chain. And availability, lead times, and just a finite capacity for those products is still a problem. It's still a gap in a lot of people's stock portfolio, and it's 18 months, 2 years in, and it's still fairly stretched out and difficult to source.
Lauro, on the flat side, are you seeing anything better or worse?
Yeah, I would say that 2023 was quite well known as being, some people regard 2023 as worse as it was in 2008. So because of the price crash that happened from March basically up to August, so it was difficult that 2024 will be worse. So it has improved on the trading side, especially after some openness in some markets like Europe, where you have more regions that you can count on, especially from May onwards when Taiwan became an option. Now Eurofair wants to revert that process, but let's leave that aside. So from as far as we are concerned, we saw an improvement from 2023, and but now we've got some good challenges ahead. This Eurofair move from the other day is one of them. Shipping costs, it's also another one. Although shipping costs are quite, it's softening, still at a high level, but softening. That's true. It's basically lost some in the past 1 month and a half. Lost something like 20% of the value. So which is cool, but it's still quite high. So I would say I would consider this as the last 12 months more positive than the previous one. So 2023 was really bad. 2024 is shaping up better than 2023, but it's difficult to measure because 2023 was really, really bad. So, but in any case, it's answering your question, we've seen some improvement. Yeah.
And Terry?
I think really to echo Laura, it's a little difficult for us as a startup, but I think what we are seeing is a better demand this year than in 2023, and we're seeing less gaps in availability than there were from the market demand. But we have seen 2024 being much better than the year before.
Okay. So where do you think the biggest challenges in the market are going to come from in the next sort of 2 to 3 months?
Biggest challenge for the next 2 to 3 months?
Yeah. Do you think that this Eurofair challenge may be one of those, Lauro? Or
so as far as we are concerned, for sure, that's the next. That happened basically yesterday. So it's not something that like for overnight you have to deal with something quite strong. So for sure, this is one of them. But I try to look positively because we believe that we are finally close to the first structural cuts on interest rates, and this will get a lot of things out of below the carpet, so projects and so on will stimulate the economy in general. So exchange rates also will come as a consequence as well. So these things tend to create some positivity in the market, and also from the trading standpoint. So we have some challenges, but I also see some good things coming from the next 2 to 3 months. Yeah.
Do we see any other challenges other than that?
From our perspective, the markets and the territories we're working in, maybe not challenges, but uncertainty. So we're reasonably closely associated with oil and gas, and a lot of the bigger companies, bigger decisions are made out of the States. So just the whole election uncertainty and which party's going to be in, and their approach seems to be holding back decisions and investment, and there seems to be a sort of a dead hand from some of the bigger companies headquartered in the States as to what they're going to do. They're maybe taking the opportunity of sitting on their hands at the moment. So in the short term, that's the biggest uncertainty that influences our markets.
Do you think as the UK being a bit closer to the US that might have a bigger impact on the UK market versus Europe?
I'm not sure. I think I think the conditions of the drivers are a bit different. So I mean, we export a lot, and a lot of that will be in the US, but it's much further afield. And in those other markets, other territories, it's a non-event. And the UK customers we've got will manufacture in the UK, but those products will end up the other side of the world as well. So it's maybe just some quietness in a way, or caution around making bigger decisions. But I think the fundamentals of the market, the demand for oil and gas is still going to carry on growing at least for the next 5 or 6 years. So it's maybe a pause rather than a fall.
Alison, do you see any challenges from as a UK producer going forward?
Well, I suppose we supply globally. So one of the, big challenges at the moment is obviously the metal prices. So while the metal prices are sliding, we're starting to see that people are quite cautious in their buying practices. Will it slide further? Will it start to pop the other way? If it pops the other way, will people start to buy again? So I think, you're right. I agree with what the guys have said. There's uncertainty in the market. There's a lot of conflict in the world. Elections are taking place. We've had a change of our own government. The US situation is obviously interesting to watch, to say the very least. But again, the metals prices are something that we see a lot of people, I think, hanging back. So again, maybe making business a little bit slower because people are just back to backing business rather than kind of, looking towards the future and what they need to make the market go forwards. So
I think we see that a little bit more as an opportunity, cautiousness in the market and people delaying their decision time and purchasing lends its way to people moving to a more immediate solution, which we're seeing as this move to digitalisation. We were talking about it in a seminar earlier, is this drive, how do we as an industry embrace digitalisation? And it helps in a way with this cautiousness where people are delaying decisions because of metal pricing and are we buying at the right time? I think where we come into this, we see that as an opportunity because we actually allow people to have that flexibility and to wait with their purchasing decision through doing it in an online manner. So we see it as a little different in the online world than in the physical manufacturing world. But I agree with you, that cautiousness, and I've run metals distribution companies for 30 years, and now I'm in a tech industry. But it is that cautiousness is, on one hand, a delaying factor and a difficulty. But we see that we're coming to aid the distributors in that with giving another sales channel that allows that flexibility and that speed of decision into the marketplace.
If the stock is not on your books, you're not going to be quite so worried, are you?
No. No. And as a marketplace, it's never on our books.
Yeah.
Obviously, the UK market, we have, a lack of, we have no import barriers when it comes to trade from outside of Europe. But unlike in Europe, where you've got the safeguard measures, we've got anti-dumping duties. And obviously, almost a third of the market's now supplied from outside of Europe on the flats sector, and on the longs we get, a significant quantity from India. And also China is also now becoming a bigger supplier of bars into the UK market as well. We've got increased investments, particularly, in Sheffield, in Marcegaglia. I know, they've invested now in improving those facilities. In terms of supply into the UK market, though, do you think that there's a future in stainless production in the UK? Alison, I don't know if you want to start off with that.
I would have to say absolutely. Clearly we have owners who are very, very switched on and wouldn't be investing in the UK if they didn't think there was a future for melting steel in the UK. We're in a very fortunate position where we have a very talented, engaged workforce. We know that by becoming more efficient, working with the government to try and, reduce energy prices, we certainly have a place in the global market, and indeed already do. We're producing near 300,000 tonnes of stainless steel in the UK, and we're managing to sell that globally. So in answer to your question, there must be a future, and it's there already, and I think it will only look brighter.
Do you think that there's ever a future for flat steel to be produced in the UK again?
I guess it's a difficult one, isn't it? I mean, it's certainly feasible for somebody to make the investment, but I guess the UK flat market is quite small relative to the equipment that you would have to put in. So there would probably be massive overcapacity in any equipment that was put in. So whether it would make sense or not to anyone, I guess somebody else would need to look at that business case. But I would imagine that's quite difficult. I mean, however, if people did want to buy, for any kind of government projects, anything that was poured and cast in the UK, we have a beautiful slab caster in Sheffield that certainly can be used for those particular products.
Terry, how do you see supply into the UK market sort of globally? Where are people tending to sort of prefer their steel to be supplied from when you're connecting the buyers and sellers?
I think for us, it's more a case of whether material is prime or not.
Okay.
So people are becoming less concerned of country of origin, providing, as everyone is now either supplying prime material or not. So if you're able to supply prime material, the quality is good wherever it comes from. And I think people are less interested in whether it's coming from UK, from Italy, or from further afield, whether it's from Vietnam, whether it's from China. It's more about the supply chain, and it's more about if the material is quality. The quality has become a given, and we see less of an emphasis of where is the origin as to what is the quality of the material that's available. So we see very little questions actually on where does it come from, but whether it's of an acceptable quality or not. So for us, we're not a manufacturer clearly, but we're funded by a major steel producer in Europe. So we're very aware of the demands and the dynamics, but I think the dynamic is moving away from where does the material come from. It's about, is the material available? Is it meeting my requirements for the products that I want to produce?
I mean, when we're looking at the price competitiveness, are we seeing that the Asian prices are more competitive, even as the prices in Europe or European-made steels coming down? Laura, are you seeing any of that? Are you still able to supply material into the UK market more competitively than the European mills on the flat side?
Yes, the answer is yes. So I think that the UK market still has a very strong presence of the Europeans because of the majority of them, they have service centers or offices, whatever. So, and rightfully so. So it's their backyard, and that's the way it is. But the openness brought by Brexit, regardless who approves it or not, but it brings more options. And in the end of the day, I think that the markets, they have to be free to choose where they can buy from. So European quality is well known worldwide, but there is some stigma, which I think in UK is getting less and less because people are testing more and more the Asian material. Because we used to say that all the time, so people that know me, they are fed up of me saying this all the time, that equipments used to be back in the day, 20 years ago, they are all Japanese, Europeans, or Americans. The standards, they are Americans and Europeans, the recipe for the cake. So, and Asians are proving more and more that they can produce material which are competitive in the first case, because all their facilities are quite new, and they have quality as well. So European producers have, I would say, still a little bit of superior quality, but due to the price difference and the quality, the intrinsic quality from the Asian producers as well, they can compete on a good manner and give value to the customers. That's why the share in UK from Asian material is increasing, and I think it will continue to go in that direction. Yeah.
Do you see that on the specialty bar side, Rodney, that they're also able to supply into the UK market for that yet?
Not at all.
No.
Not at all. It's whether you call it a throwback or a part of the market which is less influenced, but there's a couple of things going on. You've got end users or customers that will still have relatively restrictive approved vendor lists and mill sources which require detailed auditing, so that restricts the choice of mills outside of whether it's Europe or G7. That's one, but then once you get into the more speciality grades, the capability is not there to the same extent either. So it's still largely larger European mills, and even around the edges, the sort of economies of scale that are used by the European mills just are still, super competitive. I was talking to somebody from an India mill yesterday, and he was struggling to believe that he couldn't be a lower cost option for one of our product ranges. And I pointed out our mill partner was melting in 80-ton lots with a concast and going straight through a rolling mill, whereas a lot of these other Asian producers, they're not fully integrated and they're not operating at that level of scale yet in the speciality products. So I think it's a completely different kettle of fish for me and mine.
Alison, is the lack of trade defence measures in the UK market a concern as, a domestic producer here?
I guess as a UK producer, all we want really is an even playing field. Agree that there should be free trade, that people have got the opportunity to choose, what they want to choose. I guess all we would want is to probably be closer to our European partners, have similar controls in place to the Europeans, but just make sure, that the playing field is even for us. Again, where we need to ask the UK government for help on energy prices. I know we're talking about obviously what we're going to do with CBAM, thinking about carbon footprints. But again, totally believe that there should be the option, there should be free trade, but as long as we make sure that that's as fair a playing field as possible. So any trade measures that are put in place should only be done just to even the playing field from our side of things.
Yeah. I mean, obviously we've got CBAM coming in. You mentioned CBAM in 2027 as opposed to 2026 in the EU. Would that be a concern then, Alison?
Not overly, I don't think. Okay. I think, a lot of the people that are supplying into the UK market, certainly on the longs side of things, are mainly the European players. So again, who will have a similar carbon footprint to ourselves, but I think probably the wider kind of European issue on the CBAM is probably more important. So yeah, I think, as long as we align ourselves quite closely to the measures that have been put in place in the EU, I think that should work reasonably well.
Okay. So one of the things we also mentioned earlier was about the strikes at Serinox and also those in Finland. Do we think with all the supply disruptions that have occurred this year that have in particular pushed maybe people to different suppliers or more diverse suppliers in the UK market, do we think that could have changed people's buying habits longer term? Terry, I don't know if you want to start with that.
I think it has. I think the problem with all of this in my history as within the metals industry is once you open the door, then it's very difficult to close it, and no one is going to all of a sudden become dissatisfied with the new suppliers. If there will be no reason to come back, is my view. So once people have moved and they're satisfied and they're happy with the service, with the quality, with the product, it's very difficult to close that door once it's opened. And I would say, why would you want to? As someone through the supply chain, if this has not been caused by the end users, this has been something that to keep their businesses going and keep their businesses competitive, they've had to find alternative sources and alternative supply chain routes. Why would they want to change that just because the old routes are now reopened?
Lauro, are you hearing something similar from your customers?
Yeah, for sure. And Serinox was out of the market for basically 6 months. I think Outokumpu was a couple of months. So that forcefully brought people to think, I would say, outside the box. So in UK, I think that process is happening because the major changes that was shifting basically from a full European market into also Asian. It's happening quite in the back of the few 2 to 3 years. In Europe, that process is more mature, I would say. So it was easier for, an Italian service center to switch their behavior from a Serinox into any possibility of imports. So we saw that happen as well. And those things are usually they act as a reminder to buyers. So we need to keep options open. And we usually say this in a respectful manner here and also in Europe. So we as a trading company, we have to have respect for the local producers, local regional producers, but we usually talk to the customers. So don't leave the door closed from the Asia market, because they can provide a relief when you need, apart from the fact that usually it costs less. So we respect the producers, but we stimulate the buyers to keep a door open also on the outside. Yeah.
Alison, did all the strikes have a positive impact on your business then? Could that positive impact be carried forward going forward?
I think we certainly saw some increase in our loading as a result of maybe some of the other players being out for a short period of time. Do I think people will change permanently? Remains to be seen, but when obviously people come back into the market, they need to get market share back, so they will act in an appropriate way to make sure they recover their market share. I think taking the guy's point, I think when the market was really, really busy, kind of 22, I think the door was open to Asian supply then. So I think, people are quite familiar with supply coming from different parts of the world. But I certainly think, people have their long-term partners like Outokumpu, like Acerinox, like Marcegaglia. Part of it is price, but quite a lot of it is done on relationships. It's the built trust, it's the relationship forming that they will have had with those businesses that, is a big part as well as the price. So I think, there may be some people that may shift, but I think, fundamentally, these people will go back to the people they know and, the people that have supported them for many years.
Do you think there's any major challenges coming forward that could affect UK production in the next few years from a domestic producer's standpoint?
I don't think we're particularly seeing any risks to our production. Again, we try to sell ourselves on our own merits. We're not the lowest cost player in the market, nor do we try to be. We have good quality products, we have great service, we have good stocks, we have short supply chains, and they're the things that we would expect, to sell our service on. We don't try to compete, with Asian imports. There's a place for both in the market, but, certainly when we're trying to sell ourselves, we sell ourselves on our merits, and we find that, that's successful for us.
I know we briefly touched on CBAM earlier. A lot of the feedback that we sort of get, certainly when it comes to the Europeans, obviously currently dealing with the initial reporting phase in CBAM, is obviously all the bureaucracy. Is there anything that you think that it could either pose any challenges or maybe even opportunities with CBAM when it does come into effect in the UK, whether that's 2027 as it's currently planned, or whether that's brought forward to be in line with Europe if that the government decides to do that? Rodney, I don't know if there's anything that... I know you've had some dealings with CBAM when it comes on the export side.
Well, we're going through a journey, I guess, of discovery. So 12 months ago when I came here, I didn't even know what CBAM stood for, because it was just not something that had come across our desk. And then at the turn of the calendar year, January, we started to get European customers asking us for information. So we turned our attention to just how we can provide sort of simple information on a straightforward manner. And then more recently, we've started to now get UK customers who are exporting their sort of steel-intensive products back into Europe, wanting the same sort of information, but they're even less well informed or comfortable in a way with the sort of bureaucracy or the processes and the requirements. And then in the last couple of weeks now, we've had a couple of sort of larger end users that are asking us to provide, I guess, a more rounded view of our business and our impact. And it seems as though they're almost looking to understand the implications for their business outside of the UK or Europe, but starting to see carbon footprint and the sort of CO2 intensity of the supply chain as being something that they should understand more. So we're sort of taking that opportunity of trying to pick their brains as much as anything and learn as we go along.
So a lot of the customers may already be ready then by 2026, 2027 anyway. Well, maybe not ready.
I'm not sure, but it's gone from just like a a non-event, something that nobody was talking about, to something that one or two people are talking about, and I think that will creep up. So sort of trying to get ahead of the game, I think, will be helpful, so it doesn't become another, dare I say it, 31st of December, Brexit, what's tomorrow going to be like? We haven't prepared for it. At least this has got a medium-term timeline to it that you can work towards.
Are you getting any requests then from your customers then, Terry, or yeah?
We're not seeing it at all.
No.
We're not seeing any impact or any. It's not on the agenda at all.
Okay. Laura, I know you obviously deal a lot more in Europe. How are you finding CBAM?
Confusing.
Tough. Thank you. Tough question, this one. So I think it's a bit over confusing. Thanks for the suggestion. I would go a little bit beyond that. But it's coming. So we see in the past, I would say 6 months, more interest, or people talking about more CBAM, asking, are you giving the information when information is coming? So we see more interest on the matter. Let's not forget that CBAM has a gradual phase in. So I think that CBAM will start to bite to a point on an economical level. So all the concepts behind we'll not discuss, but on an economical level, I would say in Europe by 2028, 2029. So the first 2 years should be, from the economical standpoint, they should be fine. So we see more interest on that. It's a challenge and an opportunity at the same time. More challenge than opportunity, because this will likely remove, I would say, not a good chunk, but some suppliers will be removed from the market because of CBAM, I believe. But some will push towards being more effective on the carbon emissions. So I think that Europe has a future for imports. It will be more restricted, that's true. And we also believe that because some customers, they don't want to deal with the bureaucracy of CBAM, or the procedures and behind on that. So the structural traders, and we believe like ourselves as well, there will be a place for us to bring in material and process all the CBAM requirements to make it an European as well. But it's more challenging than an opportunity.
Alison, are you getting asked to provide sort of your carbon emissions to the customers that you're selling outside of both inside and outside of the UK?
Absolutely. So I guess all of our European customers are asking for the information, and we provide that in line with what they're requesting. We are seeing some customers who are deciding that it's too difficult to buy from outside of Europe, so are just buying from the European mills. So that'll be quite interesting. I guess when the UK CBAM comes in, if people want long products, I guess the way they could get around it is just to buy from us. So maybe that is a good opportunity. We're in Sheffield, by the way.
So do you think that that CBAM could sort of change the way people buy and add to the risk of purchasing from outside of Europe then going forward? Sorry, do you think that CBAM will increase the risk of purchasing outside of Europe?
I think people's... Again, as long as CBAM's applied in a fair way to make sure that it's just about levelling the playing field. Again, many of the producers globally are working to reduce their carbon footprint, and that was the intent of it. So the intent wasn't about protectionism, it wasn't about trying to protect European producers or UK producers. It should, if applied fairly, just be about even the playing field to make sure that we're all working in the same way. So as Europeans, we shouldn't be penalised for obviously trying to have a lower carbon footprint. So again, fair application of it, fair trade. I think people will still be trading, globally.
Could CBAM have any negative impact on the manufacturing and engineering sectors? I know, Rodney, you talked about the oil and gas sector, for instance, before, or any of the sectors that you're supplying into. Could that have an impact on your customers, maybe?
I think it will definitely start to influence the decision making. It's another element or another aspect of their sourcing decisions for sure. It seems a little bit strange in a way when you're involved with an industry that is so energy intensive. And I don't mean the steel side, but I'm thinking oil and gas or aerospace or the like. But these companies will still have the same pressures to be seen to be doing the right thing. And I think there's definitely movements in place where they're looking at it. For me, it's quite interesting because having started to do these exercises, I'm looking at the CO2 intensity of the products that we're currently sourcing. But doing a couple of exercises with customers, once I start to expand that to look at our processing and then the transport side, that could really influence the decision making because the transport is just such a significant part of the overall supply chain process. So just as the subject becomes a bit more mainstream and then as the scope broadens out, there'll definitely be some opportunities for sure, but I'm not sure I've wrapped my head around those yet.
So do we think that in terms of purchasing, we've got a lot of challenges when it comes to customers. We've seen, changes in the purchasing habits in general this year. Does the steel industry need to modernise the way they buy steel, moving to maybe online purchasing, or
That's a question I think I'm able to answer. The answer is yes. The answer is that we're seeing new generations of people come into the industry. We're seeing people that are used to buying in a B2C world. They're buying all of their products on an online, whether it's a marketplace or on a direct web e-commerce basis. But I mean, a recent McKinsey study said that all industrial materials are going to have to face up to the fact that more than 70% of buyers are prepared to buy on industrial marketplaces, which actually is more than the people that are buying on direct e-commerce web services. So people, the generation that is coming into the industry, and somebody mentioned in an earlier workshop, how do we bring new people into the industry? How do we invest? What is the capital investment? And we've invested 23 million euros so far just on building the platform to create this environment. We're expanding into Germany next year because there is a demand, particularly from a new generation of people that are coming in, and there is a demand on how does the industry reduce its sales expenses, how does it reduce its purchasing expenses, and that is done in a way through an online service. And data is the new gold, and the more data you can create and develop, the better opportunities for streamlining the whole process and the whole supply chain. And what online marketplaces do is they allow much more transparency, and it allows for much clearer routes to purchasing, and it leads to a much more streamlined process within the supply chain. But it has to develop, and we're part of that disruptive process. But it requires significant investment to do it. And as I said, we're so far at 22.6 million euros of investment purely to develop the platform. But it has to modernise, and it has to move with the demands of the next generation of people that are coming into the industry.
I mean, how do we ensure that moving that face-to-face sales, means that the customers are getting what they need?
Well, I think I mentioned it earlier. If data is the new gold, that we have an AI function within our business that will allow us to use the data to be much more predictive in demands and predictive in what our customers. Now, customers are both buyers and sellers. We're a marketplace where we match demand with availability. So our customers are both sellers and buyers. And for us, the relationship is clear. We have to make sure that there is sufficient material available for sale on the platform to satisfy our buyers, and that there are sufficient demand from the buyers to satisfy the sellers. So we operate with a two-faced approach to both sellers and buyers. So for us, it's about making sure that there is sufficient material available in the supply chain to satisfy the requirements. And as we know, commodity products are commodity products which are pretty much price-based and price-sensitive. And however good the relationships are, it's still pretty much decided where you buy and how you buy on price. That's not for guys like Rodney, which is very much a non-commodity product. But where we have a commodity product, it's not built. You're not achieving £100 a tonne more on relationship. And that's what a platform enables everybody to do. It enables people to sell pretty much commodity products without any fear of reputational risk, without any fear of spillage into any other areas of your business. And you don't need relationships, to be honest, to do that.
I mean, when it comes to stainless pricing, obviously we've said it all comes down to the pricing. We've seen the prices, or the way that stainless prices are offered into the market change, particularly in the UK and European market. We've gone from the base plus alloy surcharge to pretty much an all-in or effective pricing system now. We've got raw material cost volatility on nickel, molybdenum, and also stainless steel scrap. I mean, how do you think that the mills will cope with that? I mean, they're still publishing alloy surcharges. Do we think they're going to continue to do that? How will that continue going forward? I know your business is probably still maybe transacted in that way.
No, absolutely. We look every month at the alloy surcharges from our 2 or 3 mill partners, and we use that as a major part of our pricing process. So again, it's maybe one of those questions where for the more speciality products we're a bit different from the rest of the larger, more commoditized market.
Laura, how do you see things? Obviously you're selling mainly the Asian material, but also bits of European mill stuff as well. I mean, do you see a future for the alloy surcharge system, or?
I think that Rodney is on the rich side, and we are on the poor side. So because he trades very specialized.
Nobody's ever said that before.
There you are.
So he trades a lot of specialized material, so specialized customers as well with projects involved. So even programs of delivery. So the logic of alloy surcharge has a sense and will likely continue. So on our case, I would say a little bit less. It lost relevance throughout the past few years. I think when the alloy surcharges became negative, I think it was last year, I guess. So people realized that I'm not sure if that mechanism should continue, but I believe that we have 3 possibilities with the price. We have either stability, either goes up or goes down. So it's very simple. In 1/3, when you have a downward trend, more or less as we are seeing right now, people will look for alloy surcharge because it can protect them on the way down. But when you have stability, theoretically 2/3, stability of prices going up, alloy surcharge loses a little bit of the I would say interest. Let's put it this way. It's published, will continue to be published, but I think that and let's not forget one thing, which is very important. So 75% of the world is 75% of the stainless produced in the world is produced based on an effective price. I'm talking about Asia. So that in some degree is forcing also worldwide a logic of effective price in the end. So the only market that I see that strictly follows that is the American market. So American market is quite clear on that. If it goes up, it goes up. It goes down, everybody follows. So here there is a mix. And I think, as I mentioned, so in 1/3 of the possibilities of the price, you will see the alloy surcharge working. So more interest when prices are on the way down. When you have stability or prices going up, a little bit less. So
Alison, I know the bar side of things has also been moving a little bit more on that. Are you selling much from the Sheffield site on a base plus alloy still, or?
I think it depends. Certainly for short-term kind of next quarter sales, yes, many of the sales are being made on fixed pricing. But where we have long-term projects with customers, obviously there's still value in the base price plus surcharge mechanism. Protects both ourselves and our customers to make sure that obviously we're keeping in line with where the metals are moving in the market.
Just looking at the time, maybe we can try and finish on a bit of a positive note. I have a 2025 market outlook. I don't know if you want to start us off, Alison?
Yeah, I might need a wand or a crystal ball. I think, slight optimism that obviously the market is starting to improve, albeit, slowly. I don't think we'll see a massive, fantastic improvement in the market, but I think we will see gradual improvement kind of through 2025. So again, not back to the dizzying heights of 21-22, where we're all very, very happy people and could spend most of our days on a beach maybe, but I think, we'll start to see more normal levels come back next year.
Lauro, how do you see things?
I also share of Alison's positivity. So I think that, as I was mentioned at the beginning, we are very close. We were close as well a few months ago. That's also true. But I think that now we are very close to start having some interest rate cuts in USA and also in Europe as well. This, for sure, in some degree, higher or lower, will bring more positivity. Will bring direct effects on the exchange rate, and from the trading standpoint, that helps a lot. Brings us more competitiveness, and that, I think, this will carry into 2025 as well. So I think that we did not talk about nickel too much today. I think that nickel are very depressed right now, and Russia yesterday, they are planning to put ban on nickel, and then nickel spiked already on LME yesterday. This shall happen also with chromium. And usually when you have the interest cuts also, raw materials in general, they go up. So this also will push prices up in some degree. So, and I believe that nickel levels in the end are already quite depressed. And the imbalance between supply and demand of nickel, we're talking about nickel, they tend to decrease. There is more nickel than used today, that's true. But that gap tends to narrow in the coming years, already on 2025. So this will put some pressure on the price as well. So now we are living a downward spiral, but I think that things will be brighter from the next few months ahead. That's what we believe. That's how we see it.
Yeah, and although we don't have the alloy surcharge, the nickel does still impact, particularly on the Asian effective prices. So, yeah. Rodney, how do you see your markets in 2025?
That's the $64,000 question. Maybe for the more speciality side of the product and market, we're coming from a different place in that 23 and 24 up until almost last week have still been very positive. And at the moment, you come to events, you speak to as many people as possible, and I'm trying to decide, is it the end of a summer lull or the beginning of the end of the wave? And it's very difficult to read the music. So I've sort of followed the approach of my teenage daughter, and I'm manifesting it's still going to be positive, because the fundamentals in terms of the markets, desalination, naval and defence, oil and gas, should still be positive. There's no reason why they wouldn't be, and therefore there's no reason why any dip or change is transient rather than a sharp change. So I'm trying to talk things up, I think, but it doesn't really matter what I say or think. It's about what the individual businesses do, yeah?
And Terry, would you like to finish that?
I think we're reassuringly optimistic that it's going to be an improvement. That we're seeing some growth in the market. I think the big concern is the looming election and whether we see more practices put into the US in terms of protectionism. What effect will that have on the market, particularly in Europe? But no, we're seeing, I hope that we're at the end of this trough and that we're starting to see a steady increase in opportunities in coming year.
Excellent.
Thank you for listening to the Speaking of Steel podcast. We hope you enjoyed this panel discussion from the recent UK Metals Expo. Please subscribe with your preferred podcast provider to ensure that you're kept up to date with future Speaking of Steel episodes.